All right, so stocks came from the weekend with a very good start this morning, and then just went straight up from there and finished the day very strong. Your highs of the day, little tiny pullback into the close, but a good, nice little breakout move today. Now the question is, how strong was the breakout? So we're going to break that down from a technical perspective to see, from our process that we use day after day. Does today's breakout have enough technical evidence to support a more of a sustained move? Have we had a correction? Is the correction over with? Are we still on the same intermediate run? And if so, how long has it been? And what's the significance of that? We're going to talk about what's been driving the price action over the last few days. This little rally that we've been going on, and how things have been shaping up from a risk appetite standpoint there. What sectors have been leading that, and if it does continue to lead to more of a sustained move, how can we take advantage of that? We do that with our trade idea of the day today. So let's go ahead and get started. Today is Monday, May the 25th, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, let's start off taking a look at the S&P 500 with the market forecast indicators. You can see the bounce today is a pretty significant bounce because it closed above all of these highs from this past couple of weeks, little selling that we had. So it's a little bit of a reversal here in terms of again, the technical damage that we talked about that occurred a couple Wednesdays ago that kind of repeated itself on this particular Wednesday after peaking. Now we've kind of reversed that completely, like I said, with today's close being above all of these highs. Obviously not getting to new highs yet, but still relatively bullish from that perspective. Dark green shading the green line because we do have the intermediate line rolling back up again. Rolling back up with the index above a rising moving average, so that gives you the green line up here. Just one day after a pink shading, when we had dropped down below the moving average, of course. The near-term line bouncing up from bearish levels, not necessarily oversold per se, but down into this bearish range, bouncing up into this bullish range, so the green level. But again, not too overbought levels either, so that's not really the strongest. In fact, as of right now, would be considered a bearish near-term divergence, right? With a lower high, both of them below the market sentiment level lines here. Lower high point with higher highs now. So that's kind of interesting about whether today's move will end up being a fake out according to that pattern that's developing there. Of course, the momentum line also turning up, but not necessarily too high. It's still in lower levels. After getting this extreme low point, we did bounce up to an overbought level last week, not quite finishing at that level or getting high, significantly high, as you can see when you get these oversold levels, and you bounce back up to some really strong overbought levels, so above the 90th percentile is kind of what you look for to reverse what you see down here, and not necessarily the case. So we've gotten the momentum line in these areas before. Of course, they weren't coming off such extreme low points. This one really being the only one, and you notice that didn't last too long. It only lasted another day before we kind of had a smaller bout of volatility there. So it'll be interesting to see if this intermediate line gets back into bullish range like it did over here. Again, you can kind of consider this one big long intermediate run because we haven't had the intermediate line even get into the bearish territory at all. And there's been a few times where it's come pretty close. Back over here where the NASDAQ did drop into bearish territory, and this time we're also the NASDAQ did drop into bearish territory. You can see here both of these times, dark pink shading and a red line. In fact, if you notice, the NASDAQ is just barely getting up to the moving average right now. So we'll see if that ends up holding for resistance, as the intermediate line is still below 40 despite the move up slightly above 80 on the near-term line. That's the NASDAQ. The Russell was not nearly as bullish today. Also stayed below its moving average, and its intermediate line just barely outside of that bullish range. And market sentiment line now falling down here below 50. So it's not all nice and smooth here. The S&P looks like it had a really, really good breakout move, and a lot of it's from these NASDAQ 100 companies, which Didn't quite get up above these highs, and didn't quite get up above its moving average. And still has a bearish intermediate posture. So it looks good, but not quite nearly as bullish as you see. And of course, the Russell just not confirming it at all, right? And still in a very, very sideways action. Again, it casts a little bit of doubt on the type of move that we see here today, as looking as bullish as it is, and setting up for some bullish opportunities, as we'll talk about today with our trade idea. That give us a good mixture with some of the bearish trades we've done here recently, but not necessarily like, oh, okay, now everything's looking like this, so let's go ahead and get going here, because that's usually what happens when you have an intermediate decline. Everything looks the same, as you'll see when we look at the sectors in a moment. And then when everything bounces. You have really, really high correlation levels during the intermediate pullbacks here and subsequent bounces. We're not really getting that right now, as you can see. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here on the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. Click that bell next to it. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us two things. Number one, you liked your video today. And number two, you want us to do another one tomorrow. So when you click that thumbs up, that's what you're telling us. I liked it. Do another one, please, and we'll keep doing those. We check that every day. We really appreciate those who do click that thumbs up. It goes a long way for us, and we really appreciate it. Also, while you're down there, comment. What stood out to you? What questions or comments do you have? Why should other people watch it when they're coming for the first time? Post that in the comment section. Join our website at marketscholars.com. There's a link popping out up there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content in between the videos from day to day. There's my handle right there, at DavidSettle42. And join our Market Outlook Facebook group that we've created. But if you're watching us here on our blog, check out some of these other things over here on the right, including our Market Outlook live video. Here we take a look at all the trades that we currently have on from previous Market Outlook videos, and we continue to trade them until we close them. And we talk about how to manage them, how to close them, when we do, all of that. We do that every day. I do the Market Outlook. I do a live video at 3:30 Eastern Time. You can get to it by clicking on this image, or you can come up here and click on the Market Outlook Live Trade Review. Here's our upcoming trading rooms that we have over here on the right. Click on View More, or click on Trading Rooms to see all the rest of them. Of course, all of our subscribers, all of our paid subscribers get access to the Market Outlook Lives and the trading rooms, all of our trading rooms. Of course, our premium subscribers get access to it on a cheaper per month cost than our month-to-month subscribers do. In addition to that, our premium subscribers also get all of our tools and resources, as well as access to our class forums for our custom content, and be able to interact with other individuals in those classes. Come down here, click on this heart. It opens up a new tab. Click on that like button right there. Also click on this thumbs up icon. It opens up another new tab. You can click on that like button there as well. Again, the more you do that, it really helps us out by getting our content to be seen by more people who follow us. And the more engagements it has, that's how these algorithms work. So we really appreciate those who do click on that like button. It also benefits you because Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us here. All right, let's get back to the charts. Let's take a look at the weekly chart here, and you can see after a couple transition bearish candles, now we're kind of getting a transition bullish candle. Not really a significant body here, very small body, and still susceptible to a lower shadow. Still a very high PPO that's going to keep returns limited, upside returns limited, as we stay thus far within the 0 to 23% retracement level for the last few weeks. If you take a look at the 3 green arrow chart, of course, we are back now to 3 green arrows today. Very light volume though, 51 million shares trading hands with a relatively small trading range of only 3.25 points there. If you take a look at those 3 green arrows, you can see the MACD did cross. That's what gives you the green arrow there on the MACD. Sorry. Our stochastics also crossed above its moving average, crossing above 50, crossing above 0 on the MACD. The 8-day obviously crossing above the 17. That's what gets the blue line above 0. Both lines still below below the 30-day moving average, so we're not quite bouncing back up yet there. But the fact that we did get back above the 17-day moving average last Thursday and now have stayed above it for a couple of days is a good sign. Another one of those good signs that we've talked about. The directional movement index still really not giving us what we want to see. I mean, yes, the positive indicators cross above 25, but our negative index is still way up there, right? So it's not anywhere near crossing below 20 yet. That's okay. I mean, you can see that happens, right? When you got that negative up so high, it gets hard for it to finally break down. Once it does and breaks down below 25 and then eventually below 20, that's your sign that you are breaking through here and moving up. Same thing on some of these other indexes. Over here, when you had your intermediate posture, you got above 25 and actually got below 20 there on the negative indicator. It looked like we were really kind of breaking out, only to reverse and stay in that intermediate pullback. And then again, like I said, by the time you got the negative indicator below 25 and then eventually below 20, you were on that's when your intermediate run had started. Over here, some more examples of when that positive indicator can pop up with your negative still being relatively high. So it's, we're not bearish with that positive indicator jumping up. That's a sign that we're not bearish, but we're also not really bullish anymore either, because that negative indicator is also still high, not dropping down. That's why your ADX is really dropping and suggesting that we are really not in any kind of trending mode. Obviously, we're still between 40 and 60, though we are above 50. We're still between negative 100 and 100. So after coming up from really, really low levels. So we're, again, in very, very neutral zones here, with us flirting with the upper quartile of the Bollinger Bandwidth today, after being stuck in the middle band of the bandwidth for the last few days. So slightly bullish, and like I said, a good breakout above that line, but not necessarily like full on, oh, this is a really good bullish pattern, breakout pattern that we're seeing here. In fact, if you take a look at the Keltners, in addition with the Bollinger Bands, you can see how the bands are inside of the Keltner channels, which, opens you up to a possibility. That's what these red dots are. Opens you up for a possibility for a breakout move that obviously we're not breaking out of yet. You'd have to break out of that Keltner to really get going. So for example, over here, when you were red for a long, long time, and then you finally broke out there of the Keltner channel and the Bollinger Band back here in April, and you got going to the upside here. So with some good, strong momentum. We don't quite have that yet. We're still easily inside the Keltners, and we actually still have some negative momentum. We haven't turned up to these blue bars quite yet. If you take a look here at the volume today in trading range, we talked about the volume is really light, 51 million shares, and the trading range is only 3.25 points. But when you put those numbers in the context, 3.25 points is way down here. After having some pretty good bullish moves, strong numbers, way down here. The volume, 51 million, way down at the bottom too. So goes to show that, again, this isn't a breakout move, semi-breakout move, and to get that breakout, it's one thing to kind of push up to new highs with very low volume, very small range, but to get a breakout here, a relative breakout above all these highs for the last couple of weeks, not a whole lot of support there to suggest, to support that breakout. Let's take a look at the VIX, and you see we are back below 20 today. Finished last week above 20, get back down below 20, and we're below the 85% mark, trying to see if we'll make another run towards extreme lows again on the volatility index. But you can see, going back to some of these other periods, we're a little bit higher now than we were back over here when we had a very similar relative VIX. So you can kind of see how VIX is starting to kind of, you see how it's trending higher here, and we'll see if that continues, or if we kind of break that upward trend and get back down to the mid-teens again, and break down below 50, ideally below 15 when you're when you're now going to be really stuck in a good, strong, low volatility environment, trending environment, right? That's usually where the bull market will lead you to, as you can see in 16 and 17 and 18 and 19. You spent some good runs up above or below 15 on the VIX. Some good runs there in 13 and 14. Very similar monetary and fiscal monetary environment to where we see right now. Then again in 15, a good chunk of time below 15, and we're not quite there, but at least we are finally spending some time below 20. Let's take a quick look at the intraday chart. We didn't skip that chart here. This is an important breakout because we did get up above the point of control, which was actually right there before changing. We have obviously filled in the rest of this gap. We talked about that on Friday. But now we got a gap there that would be considered, I mean, very low volume, as you saw today, normal range. So that would be considered a common gap. So again, we would expect that we'd fill in that gap relatively soon. And we still have this gap over here from last Thursday to fill in as well. So, keep that in mind when you make these kind of moves, these common gap moves. I mean, ideally, if we're going to be bullish, ideally we want to start lower and then fill in that gap and then some throughout the day, because then it will hold. It's not good necessarily to get a good chunk of the day's gains. We ended up with 1.01%. Over half of that gain came overnight, and that in very extremely light volume. It's not the best place to experience so much of your gains. You prefer to experience it during the regular trading session, where you can support all the volume. You'd like to start lower with a gap down and then fill in that gap and then some once the volume actually does kick in. All right, so to summarize the technical outlook before we look at what's driving the price action today, good breakout pattern, not necessarily supported, however, by some of these technical indicators and volumes and the trading range, volatility, not really kind of confirming a breakout bullish pattern. It was more of a continuation of some bullishness we had going into the end of the week last week. The question is whether or not it can be sustained. Like we said just a minute ago, without necessarily filling in the gap sooner rather than later on an increase in volume from what we saw today. So my guess is, my expectation is that most likely we won't. I expect common gaps to get filled in. It doesn't necessarily have to be within 24 hours or even within the week, but sooner rather than later. And I do expect that that will kind of stay within this noisy period between the 0 and 23% retracement level on the S&P as we hit up with some short-term resistance near these areas. The question would be how far down we can go, and while we have had some technical damage lately, there hasn't been any follow-through on it except for in the NASDAQ and to a smaller degree in the Russell 2000. Not quite yet in the S&P. Until then we're not going to have our broader risk-off move, and we could get a continuation of the intermediate run, this very extremely long intermediate run that we've been on. Is now going on 7 months, which is again one of the longer ones I've seen. To go that long, nearly 7 months is like I said, this is about as extreme as you can get. So what do you think? Do you agree with that assessment? Do you disagree? Let me know in the comment section below, especially if you disagree. What charts or indicators are you looking at suggest why you're either a lot more bullish than I am or a lot more bearish than I am? Or if you take a look at how things have been performing since that low point last Wednesday, you can see how the Qs have really been doing very well. It's up 3%. The S&P is up 2%, with a lot of gains coming here today. You can also see developed markets, real estate doing very well too. On the other end of the spectrum, the dollar is really declining. Went back down here today. Emerging market stocks, though, not benefiting from the weakness in the dollar. Gold has been, finally, commodity prices too. But interesting to see that the long-term bonds have made a good run here today. That's not necessarily your most risk-on pattern. Let's take a look at some of these charts here. Let's take a look at TLT. and you can see how it's, you know, starting to have a really good run. Now, granted, this is very long-term bonds, but they had been pretty bearish, and looks like they're forming a little bit of a double bottom and flirting with getting back up above that moving average there. You can see how gold is just continuing to show very strong moves to the upside, with the dollar having broken up above that 23% retracement level, flirting up and down with it all last week, and then bouncing back off of it again today and holding it so far here tonight going into tomorrow's candle. So that's a very important breakout, because we couldn't get above it there, and now we are. And the market sentiment line is rising, again suggesting you know, that there's going to be continuation of this trend for the dollar, euro dollar, which is, you know, again bullish typically for risk appetite, and would be bearish for gold, and would be bearish for long-term bonds, you would expect. Interestingly enough, yields look like they're trying to break down, you know, with this intermediate line kind of rolling over at the market sentiment line, the near-term line rolling over from a bearish high point. We're getting a red line now, and potentially, eventually, dark pink shading if the intermediate line drops below 50. And then looking at commodity prices, you can see them bouncing off of a light pink shading and a rising 30-day moving average here. They had a little bit of a tiny bit of a reversal here, not very much of one, before getting up to a new high. And getting back into bullish territory with the rise up above 60 again after having this big long run. And then about, you know, again, we've talked about this before, about as weak of a pullback as you could possibly get, getting to the 23% retracement, and only really getting a few days of dark pink shading and a red line combined with each other, and just barely getting below 40 over here on the intermediate line. So again, about as weak of an intermediate posture as you could possibly get before starting this new leg higher. Again, a very similar type pattern to what you see on the S&P 500, with very weak declines that, you know, in this case did show some signs of intermediate pullback, whereas the S&P came about as close without giving us an actual intermediate pullback before getting these new highs. So it just goes to show, you know, that we continue to really push on up here without a meaningful exhale outside of, you know, the NASDAQ 100 stocks, which are the only ones that have had that type of move, and still with this intermediate line below 40, that although it's rising and appears likely that it can cross up above 40 within the next day or two. All right, if you take a look at the sector moves, you can see the big movers, right? Technology and communication services specifically. Real estate also showing that 2% run, whereas everything else has been kind of lagging behind. Remember, those are your big winners: energy, materials, industrials, financials. All have been your big winners here lately. They've been struggling, right? They've, you know, off of that 519 low, they didn't really jump up very much. They had a pretty decent day on Friday, but then didn't have a very good day today. So really lagging behind, and you see that reflected in, you know, this shift in the rotation, right? You have energy, financials, materials, all with very strong relative strength, but they're rolling over, and technology here finally rolling up. If you take a look at, like, for an example, energy here, and this is on a weekly chart, so let's look at it on the daily. You can see the weekly has been rolling over, but the daily has been so strong. Let's take a look at that one, and then we'll zoom in on this past year. You can see that it's starting to roll over now to the downside. Here, let's go SPY down here. There we go. Starting to roll over to the downside, and the momentum just barely crossing below 100. So, you know, we're going to get some underperformance in XLE and XLB. You can see with this momentum rolling over, and XLI with this momentum rolling over, and XLF with this momentum crossing, everything just rolling over. Whereas you have, you know, XLK starting to turn up from very low levels, and XLP already at pretty strong levels. XLU, you can see kind of flat and really not doing much of anything right now. So a pretty strong move in the other direction to these QQQ type names, the rising MACD, and PPO is still above its rising moving average, and the CCI It's still between 100 and negative 100, not really going in a direction yet. And you're still between 40 and 50 or 40 and 60 on the RSI either. So we're not really getting a directional move quite yet, but starting to push our way up towards the upper end of that sideways range. Let's take a look at the 12 grid chart for this, and it's kind of interesting patterns too. As you can see, these had been the more bearish ones, technology and discretionary and communication services, and that's why they're making the bigger moves. Whereas financials, industrials, materials, and energy never did fall below their moving average. And neither did any of these safe haven areas. They're all still strongly bullish. Light pink shading on a lot of these with falling intermediate lines, but then light green shading with rising intermediate lines at low levels hitting moving averages. So we need to kind of see if these are going to break through, because if they don't, then they'll turn back down into dark pink shading because they're already below 50, and these will continue their fall down towards 50, and if not below, and turn into dark pink shading themselves with the outperformance down here in your safe haven areas. So that would be kind of signifying of a reversal towards risk aversion, more broad risk aversion than what we've seen, and that's been very limited to lately, just these QQQ type names. So I noticed in our class portfolio that once we got through May expiration, a lot of these options expired worthless. We were able to lock in a lot of those maximum gains in those trades. It left us now with June option trades where we have a lot of negative deltas. So I wanted to look for something in addition to the hedge that I have. So take away the hedge and we still have a lot of negative deltas. So what that does is it gives me an opportunity to make more of a bullish trade, just to give me some more bullish deltas here, and try to take advantage of the type of move we have depending upon the type of stock that's making that move. This is one of those stocks, Analog Devices, just barely had earnings. That gave us a bullish engulfing pattern and a reversal. In fact, if you look at the reversal, we went from lower quartile and the Bollinger Bandwidth to boom, upper quartile, just like that, boom, boom, with a relatively high bandwidth too. If you take a look at the Keltner channels here, the Keltner channels are actually outside of the Bollinger Bands, and we went from the lower end to the upper end, just like that, just that quickly, and with a rising momentum line now down there. If you take a look at the directional movement index indicator, its negative indicator did drop below 20 after being up above. Boom, just like that, drops below, and we cross up above 30 on the positive indicator, with the RSI and the CCI also showing some good strong patterns here, getting up above 60 and getting up above 100 again. So very good, strong patterns that we haven't seen for a while, getting up above the, being well below the cloud and being below the green line, to now the green line crossing back above the blue and the price getting above the green line or the cloud, and the red line getting above the price. So pretty decently strong breakout. Still pretty noisy, but you can see a lot of breakout potential showing up in the charts. You can see the good bullish candlestick pattern that we're getting on the weekly chart to begin the week with as well. So there's a lot of good bullish signs and opportunity for, not necessarily a huge move, but a move that we can take advantage with. So what we did is we said, okay, well, what if we sold the 170, bought the 170, or sold the 175, bought the 170 call option? So what that ends up doing is it gives me about a 3-to-1 reward to risk ratio. We got filled in there for $500 each on the 4 contracts, so $125 each. And then going for, like I said, a 3-to-1 reward to risk if we get up above or get to 175 and stay up there. You see that 175 this is for July expiration, mind you, so July, and 1 standard deviation is up there at 181 with no volume keeping you. So if we were to continue to break and push up against the upper band, there's no volume up here that can keep you down if we were to kind of break out of this. All right, so that wraps us up for today. You've heard from me now. Now I want to hear from you. Use that link that's popping out in the top right corner of your screen that takes you to our Market Outlook forum. Open up any new thread there with any questions or comments you have about anything we talked about in the video today. I'll reply to anybody else's threads. Remember, everybody has access to that forum, including our free subscribers on our site. So let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, comment on our video. Thanks again, everybody, for watching. Have a great rest of your Monday night, and we'll see you all tomorrow.